In this educational video, we want to explain your annual escrow statement, which is designed to provide details of your escrow account. It shows how much money was collected towards your escrow account, as well as how much was paid for insurance and/or property taxes during the previous year. In addition, it includes estimates or projections for the coming year. In the upper right section of your escrow statement is an area titled New Payment is as follows. In addition to the monthly principal and interest payment amount, you'll see the new required monthly escrow payment amount, whether there's a shortage or a surplus in your escrow account, the new total monthly payment amount, and the effective date of the new monthly payment. The most common escrow question is, why do I have a shortage in my escrow account? Monthly escrow payments for each year are estimated by analyzing what was paid during the previous year. A shortage happens when increases in your taxes and/or insurance premiums occur, such that your monthly escrow payment is too low to maintain the minimum required balance in your escrow account. The minimum required balance will be explained in more detail later in this video. Let's look at a statement that explains the activity in an escrow account and why a shortage can occur. In the section titled Escrow Account Projection for the Coming Year, we explain why we maintain a required reserve, also known as a cushion, of up to 2 months or 1/6 of your annual escrow disbursements to cover tax and/or insurance payments made from your escrow account. In this sample statement, the required reserve is equal to 2 monthly payments of $976.79, or a total of $1,953.58. In this section, you'll see the lowest projected balance, referred to as the projected low point. The sample statement indicates a projected low point of $1,444.67. This amount is compared to your 2-month reserve, or cushion, to determine if a surplus or shortage exists. When the projected low point is less than the required reserve, a shortage occurs. In our example, the required reserve of $1,953.58 is compared to the projected low point of $1,444.67, resulting in a shortage of $508.91. We make covering this shortage easy for our borrowers by dividing the shortage amount across 12 months. This monthly amount is referred to as the shortage spread and is shown in the New Payment is as follows section at the top of your statement. In our example, the shortage of $508.91 is divided by 12 months, resulting in an increase of $42.41 to your monthly payment. If the shortage is greater than or equal to 1 month's escrow payment, the shortage will be spread over 12 months. If, however, the shortage is less than 1 month's escrow payment, you can spread it over 12 months or have the option to pay the shortage in one lump sum. When this occurs, an escrow shortage remittance form will be included at the bottom of the statement that can be used to pay a shortage of less than 1 month's escrow payment in one lump sum. By doing this, the total payment amount indicated at the top of the statement would be lowered, and a new payment amount would result. In this example, the total monthly payment amount of $2,282.45 minus the monthly shortage of $42.41 would result in a new payment of $2,240.04. Please keep in mind that a one lump sum payment will reduce your new monthly required escrow payment amount, but it will not lower the actual amount of your taxes and/or insurance premiums. Your new monthly required escrow payment most closely depends on whether your taxes and/or insurance premiums have changed. In the section titled Annual Escrow Account Disclosure Statement, Account History, you can see the projected and actual deposits into your account, estimated and actual disbursements from your account, and the running balance through the year. You can also see a breakdown of payments made on your behalf, including insurance premiums, as well as payments for county, city, school, state, and local property taxes as applicable. On the last line, you'll see the totals for what was projected as compared to what was actually collected and paid from the escrow account during the previous year. Also in the account history section, you'll find possible reasons for a shortage. For example, if the amount that was actually paid is higher than what was projected to be paid, a shortage in the escrow account may result. Looking at our sample statement, you can see that the actual payments for city and school taxes and homeowners insurance totaled $11,721.48, which is higher than the projected payments of $11,339.76, resulting in a shortage. The actual payment amounts in the account history section are then used for the projections in the coming year. We understand it can be frustrating to see a shortage after regularly paying into your escrow account each month. Remember, we do not determine the amount of your taxes and/or insurance premiums. If the escrow payments do not look right, share the numbers with your insurance agent or taxing authority. Although we've been talking about a shortage, it can also be the case that you have a surplus. If the surplus is less than $50, the money will be credited to your escrow account. If the surplus is equal to or greater than $50 and your loan is current as of the date of the escrow analysis, the surplus amount will be refunded to you in the form of a check that will either be included with your escrow statement or mailed to you within 30 days of the escrow statement. We want your mortgage to be easy to manage. We hope this video helped explain how to read your annual escrow statement. Thank you for being a valued customer.